What's up, guys? Back again with another video, and today we're gonna take a look at the stock Six Flags. So get ready for some free game. We're about to get it. All right, so welcome back, guys. Happy Thanksgiving. Today the market is actually up pretty nicely. Right now I'm up $212 so far today. This is my portfolio. The last time I funded it was yesterday. I put like roughly about $200 in. I am aggressively trying to fund this portfolio in the hopes that when I retire, it can become a source of passive income for me. All right, so today we're going to go ahead and talk about a theme park company, which is Six Flags. So let's go ahead and pull the stock up. All right, so Six Flags right now, as it stands, I think is personally undervalued. They have a lot of business. For 2018, they had like 30 million visitors. They have since shifted more focus onto not just being like a summer, park for like, rides and like water parks, but they're also now getting in on like the holiday season, as well as trying to take advantage of Halloween as well. They are aggressively expanding overseas, primarily in China. And I personally think that China is going to be a huge economy. I would say within the next 5 to 6 years. They have currently 11 different locations in China, and there's one in Dubai. Well, this company is really expanding. So what I want to do is go ahead and just pull up my buy sheet here, which the first time I showed you guys this sheet was pretty much when I did a review on the Eli Lilly stock. So these are just 16 different parameters that I go over to see for my own personal use if the stock for me is a buy. All right. So anything that's 8 or better, in my opinion, is a buy. So one of the first parameters is, does the stock pay a dividend? Yes, it does. And it receives a score of 1. Is the dividend yield above 3%? It's actually 5%. So that receives a 1. Is there a 10-year increase in dividends? No. They have increased the dividends now for 9 years straight. So almost at that mark, but not quite yet. Is the current price down and the yield up? Yes. The stock is actually trading right now roughly about 30% below the 52-week high. And the 52-week high is roughly $64.28. So right now it's a steal. 5-year dividend change above 10%, yes. Price below the 52-week high, yes. And the 5-year stock growth, is it above 20%? No. Over the last 5 years, they're roughly looking at, I would say, about 11 to 12% growth. Is it above 100% for the 5-year growth? No. The market cap, is it above 10 billion? No, it's not above 10 billion. So this is a mid-cap company. Is the enterprise value below the market cap? No, it's not. The actual market cap right now is 3.75 billion. They have about 2.27 billion in debt. So the enterprise value right now, when you factor in like the cash flow, or you take away the cash flow, they're at 6.56 billion. Held by a major bank. Yes, the stock is actually held by a major bank. So let's go ahead and take a look at the stock over here in Yahoo. When you go ahead and pull up the stock in Yahoo, you type in the ticker 6. If you go to the section here where it says details, and you scroll down to where it says holders, if you click view all, it shows here that the stock is held. These are the top institutional holders. And as far as banks, we have Royal Bank of Canada, and we also have the Bank of New York as the major bank holders. The next perimeter on the list is it held by a major investment firm? And as we can see here, we have BlackRock, which you guys know is pretty much the largest asset manager in the entire world right now. And then most people know Vanguard as well. All right, so the stock is held by a major bank and held by a major investment firm. All right, so next up is, has the stock beat earnings over the last 3 quarters? And the answer to that is no, it has not. If we go back over here to Robinhood and we go down to the EPS, you could see here that the expected EPS, the stock on this last portion here, which is Q3, it actually fell short of the EPS, the expected earnings per share. So that's a no. So that one receives a 0. The CEO, the current CEO, has he presided over 8 different EPS beats? And it's a 0. The previous CEO, Mr. Reed, he actually, or Anderson Reed, as his last name is hyphenated, he recently resigned, which was on November 18th. And he presided over, definitely over 8 successful earning beats. But this guy, Mike Spanos is new. He pretty much just became the CEO when Mr. Anderson retired on November 18th of this year, of this month actually, because we're still in November. So on that, it's a no. The next perimeter is a monopoly, duopoly, or a dominant market share. Yes, this is the largest theme park in the world, and they're definitely the largest in North America. And I'm talking when you stack them up against their competition, which in this segment we have SeaWorld, we have Cedar Fair, we have Disney, and then we have Universal Studios, which is owned by Comcast. Six Flags is definitely the largest of all those theme parks. So yes, in my opinion, they have a dominant service. The other thing too you want to take into consideration is that, you know, this type of business has a high bar to entry. You know, it takes roughly about $500 million to build a theme park. So it's not something that, you know, competition can just jump up and say, hey, let's go build theme parks. It's not as easy as, you know, it may sound on paper. So as far as, you know, some kind of dominance, they receive a score of 1. Do they have a multiple, you know, hit service or product? Definitely. You know, Six Flags. The name speaks for itself. All right. So the other thing I wanted to do now is hop on over here to TD Ameritrade. And I just wanted to show you the information as far as the dividends on this stock. So currently now the stock price is $44.10. The ticker is 6. And if we scroll down here to where it says dividends, it says today is the ex-dividend date, which is November 27th. So today's your last day to purchase this stock if you're looking to get paid on the next pay date, which is December 9th. Currently, the price paid per share is 83 cents, and it's paid quarterly. I own this stock. The last time I paid was in September, so they're going to pay again in December because it's every 3 months. The total dividend yield is 7.48% or $3.32 per year. So this is an extremely high dividend yield, you know, and the stock is at an extreme value right now. If you're a dividend investor, this is something that, you know, you might want to look into. The price of the stock, $44.10, and to be paying 83 cents right now per share, that's pretty decent. You know, if you look at like another high paying stock, like say AT&T is roughly like about $37 right now, and they're paying 51 cents. And then you could go as crazy as say, look at something like Nike. Nike is like $93. And I think Nike only pays like 20 something cents per share per quarter. So this is actually pretty good. As far as a brand, the company does have a huge brand. They have good assets. You know, they don't have too much debt. And they are actually in the process of expanding internationally. Another thing that they started doing as well too, which is actually good for revenue, and this was under the stewardship of Mr. Anderson, but they started charging a monthly fee. Instead of that 1 year renewal membership, they charge a monthly membership. I don't know exactly the specifics, but under his tenure, the stock and the company saw some really nice growth. So for me, I think this is a buy. You know, I think it's on sale right now, if you ask me, and I can only see growth from here on out. You know, over the last 5 years, like I said, they are up 11.29%, but the stock is really down right now, way below its 52-week high. You know, I plan to scale up some more on this, you know, and try to bring my average cost down. As you can see right now, I have 12 shares of it, and my average cost is $45.32. So I am currently down $15.23, or I'm down 2.8%. But I feel very confident that this company will go right back up. The price will go right back up. They have an amazing service. You know, they're, like I said, it's a hard business to get into, and they're the dominant company in this sector. You know, they're bigger than Disney, they're bigger than SeaWorld, they're bigger than Universal Studios. You know, they're pretty much the top dogs in this segment of like theme parks. And they have theme parks with rides, and they also have water-based theme parks as well. Add to the fact that they're expanding internationally, you know, that makes it a go for me. All right, so let me know what you guys think about this stock in the comments. Let me know if you're bullish on this or you're bearish. Do you think the stock is, you know, on sale right now, or do you think this is a bad investment and it's going to slide even further? So leave your comments in the section below. Let's talk. Also, if you guys don't follow me on Instagram, my Instagram is passiveincome_. Please go ahead and do so. I post every single day. My blog is also in the description. The blog website address is passiveincomeideastoday.com. And the links for all this will be in the description. All right. Thanks so much for watching the video, guys. I really do appreciate it. If you love the information presented here, go ahead and smash that like button and subscribe for more videos. Y'all have a blessed day and happy Thanksgiving.